Welcome back to Bazaar Morning Call. We wake up this morning to positive global cues as well as our own markets. The SGX Nifty is indicating the start will be about 100 points higher. Let's see how we take it from there. Our research team is here with us to give you the list of top 10 stocks as we kickstart trade this morning. Anuj, what would you be looking at today?
Sonia, a couple of non-index large caps, something I'll look at. First is Bharat Forge. It's the strongest stock in the F&O space you know what, it's swung from 52-week low 2 months back to almost a 52-week high. That's been the kind of strength that you've seen in this stock. So that's something I'll keep an eye on. And the other one is Voltas because, it showed strength in weak market on Friday. And like we were discussing, the numbers were actually very strong for Voltas compared to the estimates. So perhaps today there could be some follow through in the stock today. That's Voltas to watch out for.
Okay, fair point. But I guess Glenmark will be a cynosure of the market today, Sonal. Good numbers.
Was operationally in fact very strong. Revenues increased 1%. That was slightly lower than estimates. But if we talk about EBITDA, that was up around 40%. Margins were up 600 basis points on a YY basis. Profits also up 133%. The revenue growth was subdued this time around because of lower revenues coming in from Latin America and also rest of the world region. But apart from that, growth was strong across geographies. Also remember the stock has valuation support right now. Trades at 12 times FY22 EPS, but also is in the F&O ban today. So let's see which way the stock reacts, but the numbers were really strong.
F&O ban is an issue, right, for some of these stocks. So let's see how it moves. No F&O ban, of course, for Berger Paints, and the numbers looked quite good here, Mangala.
The numbers actually looked quite good, Anuj. If you take a look at the revenues, 931 crores. This compares to our poll of close to around 800 crores. So a big beat coming in out there. The reason is that the company has a higher salience towards the east and non-metro. So that is what supported them this time around. The western and the southern region were more impacted by COVID. We had the EBITDA as well, which was actually more than double our estimates, and that was on account of lower other expenses and stable gross margins. The reason why net profit was lower was purely because of higher effective tax rate. But again, the big question for Berger, at 57 times, it's actually the highest or the most priced stock in the sector, for more highly valued than even Asian Paints. So we'll watch out for how that pans out.
Okay, thanks a lot, Mangalam, for that. Let's hop across to Nupur now to find out how Sun TV did this time around. Nupur.
The Sun TV reported weak earnings due to lockdown and slowdown in economy. We saw ad revenues declining since the start of FY20, and this time as well, ad revenues down 67%, subscription revenues up 18% on expected lines, and as a result, total revenues down 44%. Profits down 26%, but you remember base quarter had IPL as well as movie business revenues. But in their conference call, management indicated that ad revenues are currently at 75% of pre-COVID levels, and subscription revenues could be better in second quarter of FY21. Brokerages have a buy rating on their stock and target price anywhere between 480 to 500 on valuation. Support rates at 10 times FY22 expected earnings. So numbers are weak, but management commentary is positive. Back to you.
Okay, thanks a lot for that. That's the pattern, isn't it, Nupur? Numbers weak, management commentary strong, but no such dangers from New India Assurance. The numbers were strong, weren't they, Yash?
Well, Lata, roaring numbers from New India Assurance. On the premium front, the total premium has grown by 6.5% as a year-on-year comparison. The net earned premium is up by about 11.3% on a year-on-year basis. But just look at the operational performance, a good beat coming there. So your underwriting loss has narrowed to about 403 crore versus a loss of 1,097 crore. But your operating profit has come in at about 196 crore, which compares to a loss of 111 crore. This has primarily happened because the underwriting profit has come in the segments like motor and health insurance, which are loss-making segments for both New India Assurance, and which has really pushed the combined ratio to 102 as compared to about 116. Of course, strong beat operationally, which is a positive for the stock.
Yes, thank you so much for that. Let's move on.